Section 1, Smoke and Mirrors, Virtual Entities in the Indonesian Cigarette Market. The Indonesian cigarette market is huge, encompassing a vast network of vendors and consumers. It's also riddled with problems, from regulatory issues to health concerns. One of the biggest virtual entities, which are becoming increasingly common. These are essentially ghost businesses operating in the shadows. They exist on paper, but not in reality, making them hard to trace. They allow companies to avoid taxes, creating a significant loophole. This costs the government billions of rupiah annually, a massive financial drain. Virtual entities are particularly prevalent in the cigarette industry, more so than in other sectors. They operate at the retail level, blending in with legitimate businesses. These businesses often have no physical presence, making them elusive. They might be nothing more than a name on a piece of paper, a mere facade. This makes them incredibly difficult to track, complicating enforcement efforts. The lack of regulation makes the problem worse, as oversight is minimal. Authorities struggle to enforce tax laws effectively, facing numerous challenges. This is because they can't easily identify who is responsible for paying taxes, leading to widespread evasion. The result? A system where tax evasion is rampant and accountability is scarce. This isn't just an Indonesian problem, it's a global issue affecting many countries. Virtual entities are a global issue, thriving in various industries. They thrive in industries with complex supply chains, where oversight is challenging, and where there is a lack of transparency, making it easy for them to operate undetected. But in Indonesia, the cigarette industry stands out as a prime example. It's a prime example of how these shadowy entities can flourish, evading detection and regulation. Section 2, the law versus reality das sollen and das sein in cigarette taxation. Indonesia has laws that are designed to regulate various aspects of society, including taxation. These laws are meant to prevent tax evasion and ensure that everyone pays their fair share. But the reality on the ground is different, often starkly contrasting with what the law intends. This is where the concepts of das sollen and das sein come into play, highlighting the gap between the ideal and the real. Das sollen refers to what the law says. It's the ideal, the standard that is set by legal frameworks. The law states that all businesses, regardless of their size, must pay taxes. It doesn't matter if they are big or small. Everyone must contribute to the national revenue. Das sein, on the other hand, is the reality. It's what actually happens in practice. In Indonesia, many cigarette sellers don't pay taxes operating outside the formal economy. They operate in the shadows, avoiding the reach of tax authorities. This is because they are part of these virtual entities, which are difficult to regulate. The gap between das sollen and das sein is huge, and it highlights the ineffectiveness of existing laws. It underscores the challenges faced by the legal system in enforcing these laws. The Indonesian government needs to bridge this gap by implementing more effective measures. It needs to make sure that the law is actually enforced and that tax evasion is minimized. This means cracking down on virtual entities and ensuring compliance. It means holding those who evade taxes accountable and making sure that justice is served. Only then can Indonesia create a fair and transparent tax system benefiting all its citizens. Section 3, a web of smoke, informal partnerships and the cigarette retail network. The Indonesian cigarette market is complex. It's a web of informal partnerships. These partnerships make it hard to track sales and even harder to collect taxes. At the heart of this web are main distributors. They act as intermediaries. They connect cigarette manufacturers with retailers. These retailers can be anything from small kiosks to street vendors. The problem is that many of these retailers are part of virtual entities. They operate under the radar. This makes it easy for them to avoid taxes. Main distributors turn a blind eye. They benefit from this arrangement. It allows them to sell more cigarettes. These informal partnerships create a system of opacity. It's a system where accountability is lacking. This makes it incredibly difficult for the Indonesian government to collect taxes. The result, a loss of billions of rupiah in potential revenue. Section 4. The vanishing puff, lack of documentation and tax evasion. Tax evasion in the Indonesian cigarette market is rampant. One of the main reasons, a lack of documentation. Transactions are often conducted in cash. There are no receipts, no invoices, nothing to prove that a sale took place. This lack of documentation makes it impossible to track sales. It's a gift to those who want to avoid taxes. They can underreport their earnings or simply not report them at all. The Indonesian government is aware of this problem. They have introduced regulations requiring retailers to issue receipts. But enforcement is weak. Many retailers continue to operate in the shadows. This lack of documentation is a major obstacle to tax collection. It creates an environment where tax evasion is the norm. Until Indonesia addresses this issue, it will continue to lose billions of rupiah in potential revenue. Section 5. The puppet masters, main distributors and the manipulation of transactions. Main distributors play a key role in the Indonesian cigarette market. They are the link between manufacturers and retailers, but they're also key enablers of tax evasion. How do they do it? Through the manipulation of transactions. Main distributors often underreport their sales to manufacturers. They then sell cigarettes to retailers at inflated prices. These retailers are often part of virtual entities. This creates a situation where the actual volume of sales is hidden. It's a complex scheme designed to minimize tax liabilities, and it costs the Indonesian government billions of rupiah every year. The Indonesian government needs to crack down on these practices. This means increasing scrutiny of main distributors. It means holding them accountable for the actions of their retailers. Section 6. Business or sham. The business purpose test exposes tax avoidance schemes. The Indonesian government has a tool to combat tax avoidance, the business purpose test. This test is designed to determine if a transaction has a legitimate business purpose or if it's simply a scheme to avoid taxes. In the cigarette industry, the business purpose test is crucial. It can be used to expose sham transactions. Transactions that are designed to create the illusion of profit when in reality they are simply a way to move money around and avoid paying taxes. For example, a main distributor might claim to have sold cigarettes to a virtual entity at a loss. This would reduce their tax liability. But if the business purpose test is applied, it might reveal that this transaction never actually took place. The Indonesian government needs to use the business purpose test more effectively. It is a powerful tool that can help to level the playing field and ensure that everyone pays their fair share. Section 7. Cooking the books, the tax accounting equation and the art of reclassification. The tax accounting equation is simple. Revenues minus expenses equals profit. It's the foundation of tax accounting. But in the Indonesian cigarette industry, this equation is often manipulated. How? Through the reclassification of transactions. This involves disguising one type of transaction as another. The goal? To reduce taxable income. For example, a main distributor might reclassify a sale as a loan. This would reduce their revenue and therefore their tax liability. They might also reclassify an expense as an asset. This would have the same effect. These reclassifications are often complex and difficult to detect. But the Indonesian government needs to be vigilant. They need to use sophisticated auditing techniques to uncover these schemes. Section 8. A global epidemic. Insights from the Financial Secrecy Index and Tobacco Atlas. Tax evasion in the Indonesian cigarette industry is not an isolated problem. It's part of a global epidemic. The Financial Secrecy Index ranks Indonesia poorly. This means that Indonesia is a haven for illicit financial flows. The Tobacco Atlas paints a similar picture. It shows that the global tobacco industry is awash in dirty money. Cigarette companies use sophisticated techniques to avoid taxes, and they often target countries with weak regulations. Indonesia needs to learn from the experiences of other countries. It needs to strengthen its regulations and enforcement mechanisms. It needs to work with international partners to combat tax evasion. Section 9. Clearing the air towards transparency and accountability in the cigarette industry. The Indonesian cigarette industry is in dire need of reform. Tax evasion is rampant, and the current system is failing to address these issues effectively. The government is losing billions of rupiah in potential revenue every year due to these practices. This money could be used to fund essential public services such as education, healthcare, and community development. The solution is clear. Transparency and accountability are crucial to reforming the industry. Indonesia needs to introduce stricter regulations and ensure that these laws are enforced consistently. It needs to enforce these regulations effectively with regular inspections and audits, and it needs to hold those who break the law accountable with significant penalties for violations. This will not be easy as the cigarette industry is deeply entrenched and powerful. The cigarette industry is powerful. It will resist change and use its influence to maintain the status quo. But the Indonesian government must stand firm in its commitment to reform. The future of the country is at stake, and the well-being of its citizens depends on these changes. Here are some concrete steps that the Indonesian government can take to address these issues. Strengthen tax laws and regulations to close existing loopholes. Close loopholes that allow for tax avoidance. Increase enforcement efforts. Conduct more audits to ensure compliance. Impose harsher penalties for tax evasion. Improve transparency in the industry. Require all cigarette retailers to register with the government to ensure accountability. Make tax information publicly available to increase transparency. Work with international partners to share information and best practices. Share information and best practices to combat tax evasion on a global scale. Coordinate efforts to combat tax evasion and ensure compliance across borders. These are just some of the steps that Indonesia can take to address this problem effectively. It will require a concerted effort from the government, civil society, and the international community to bring about meaningful change. But it is an effort that is well worth making for the future of Indonesia and its people.